We are pleased to welcome now Kathy Krainger, President and CEO of the Florida Bankers Association and former Director with the Consumer Financial Protection Bureau, the CFPB as it is typically known. Kathy, thanks for coming on.
Thank you so much for having me, Gerard. It's fantastic to be with you.
Yeah, absolutely. So, you know, the CFPB, there's been significant changes that have occurred with that agency since President Trump was inaugurated. It created, of course, in the wake of the 2008 banking crisis, and it was one of those things where the Democrats who swept control of the government felt like we got to protect those consumers out there from these bad bankers. It just felt to me like, Kathy, that it did more harm than good, and now it's virtually being dismantled. What's the status there?
Well, it is fair to say you cannot underestimate the impact of the election last year on the CFPB, and certainly on, in the context larger of all of the things about how the government operates and what the role of government is in our lives and in society. So the president had a clear agenda, and he's carrying it out. To your point, though, I think it does go back to the financial crisis and the creation of the CFPB, how it was created, worth a moment on that. And you did have Democrat control of the House, the Senate, the White House, and they took ownership of this consumer financial protection issue, and they made it pretty clear, a new agency, they were going to make that the cop on the beat. That agency is, so insulated in its creation that you had a sole director who did not report to the president until the Supreme Court decided that while I was director. And that the funding mechanism of that agency is literally to write a letter to the chairman of the Federal Reserve saying, just give me this. This is the operating money I need for this quarter. Thank you. That is what I did. I mean, every quarter there was an assessment of what our budget needed to be. And so there were a lot of insulation created to that agency that, to someone who is an attorney, it feels fairly unconstitutional. And we're starting to see some of that come into effect. We can get deeper into it. There are so many directions to go with this conversation. But
what I recall, Kathy, once it was established and implemented, was just casual discussions with banker friends, including bank CEOs and executives, in particular in the community banks, which we have a large number of in Mississippi. We have a large number across the country, and they're so critical, so value to the communities that they serve, was that the CFPB had issued regulations to the point where they were hesitant just to conduct the normal business, right, of loan making. And we're always worried about something that would violate those regulations, and I think that hurt consumers at the end of the day.
I certainly feel that way. I think it's unfortunate that we had a situation where, for Republicans, I am a Republican, but I'm frankly first and foremost about effective government and what makes sense from a policy standpoint for the American people. But getting us to a place where, Democrats said, hey, protection of consumers is actually about paternalism. It's about us telling you what's good for you or not, and then making sure we punish institutions regardless of whether they're doing the right thing and somebody made a mistake. It's a minor ticky-tack violation, but we're going to really bring the hammer down on that. So there are a lot of dynamics with how the CFPB carried out its mission that continued to cause a problem. I mean, in terms of what are we doing here? And so I'd also say the direction of it was getting your hands around these institutions. There clearly was a direction from one side of having fewer banks so we can control and commoditize their products and eliminate the relationship banking that so many community banks thrive on, and it's their business model, and it's frankly what's good for consumers. The opportunity for a small business owner to come in and say, hey, this is my idea, you know me, you know what I have in terms of collateral, let's move forward with this kind of a loan or credit or what is the right product for me. Flip that to, again, everybody gets the same cookie cutter process, and everybody's got to fill out the same stack of paperwork, and it's all documented, and it's all, and it's all the same, regardless of size, regardless of risk, regardless of anything. And that's easier to regulate. So if you're trying to regulate, of course, having a standard process is going to be what you'd want.
Yeah, but that interferes with the market dynamics, and look, we don't want banks out there making bad decisions, but the market usually dictates that they don't make bad decisions. It's not perfect in that respect, but that's also just a function of free markets. When the government steps in, I think often what happens is they just don't do anything for fear that they may cross over some line somewhere, and then the regulators come in and slap some penalty or fine on them, and they say, okay, we're never doing anything remotely close to that again.
Yes. No, I mean, getting back to common sense is definitely what we tried to do in the first Trump administration amongst the financial regulators, and what we're bringing back again. I mean, the last 4 years with the amount of regulatory overreach, and just, I said it actually from this fantastic banking symposium we're sitting outside of right now, that they lost sight of the ability to give people some latitude. Give some latitude, and you get to, again, this cookie cutter regulation, and the intent of things like Community Reinvestment Act, the intent of things like Equal Credit Opportunity Act, it is to create a fair playing field, but not to create all this bureaucracy and red tape that then undermines the very consumers trying to help. Yep.
All right, so a whole bunch of stuff's going on that in the financial industry, in the banking industry, with respect to fiscal and monetary policy. Any thoughts in particular, Kathy? I would have thought that we would have seen the 10-year to which mortgage rates and most consumer borrowing is attached to. I would have thought we'd have seen that fall below 3, but that just hasn't happened. Maybe once or twice it crossed it and went right back up. And now the market sold off yesterday because investors feel like that the Fed, not having received information from the BLS for the month of October, is not going to take any action with respect to the benchmark rate. What do you think about all that?
Well, look, I do think we do have government way too involved in the markets in general. So, and we are dealing still with inflation and a lot of uncertainty. And I think it's a hard place for the Fed to be. I mean, we're just discussing it there too. With the president being in real estate and being a populist, he wants to see low rates. But there is lessons learned here in terms of inflation and navigating and managing inflation.
No doubt.
We don't want to see that come back. So I still think this economy is strong, and I think we're in a good place. But, like coming from Florida, I will say one of our challenges on this front, too, is just the sheer interest of people to move to Florida, and then the supply of housing and infrastructure. And so, there are headwinds against having lower rates, and some of the dynamics that we're dealing with in terms of cost have to do with just sheer supply. Yeah.
Absolutely. So 50-year mortgages. You got any thoughts about that?
I've been hearing again this popular, idea of doing that. I mean, I don't know where I'll be. I don't think I'll be here 50 years from now. But the notion that it's a 50-year commitment or that you're going to stretch it out that long, I'm not sure who that is the best product for.
Gotcha.
But it does get you back to fundamentally, what is the cost? What are the other factors? Let's look at things that we can control and supply. From my standpoint, I think I'm excited about some of the efforts to address supply challenges in housing as one of the probably more, there's no panacea, but one of the more important things to do to deal with the housing market. I don't know that a 50-year product is the right answer from that standpoint.
But in my view, if there's no government backing of that, if lenders want to do that and consumers are okay with those terms, let them do it.
Sure. I think again, it being illegal, I take your point on that.
Yeah.
Again, let people. Well, again, don't let the government tell in a paternalistic way consumers what is best for them.
Totally agree.
Not every consumer's in the same position, and so thinking about that and having that opportunity is key.
We got about a minute left here, Kathy, but there was lots of doom and gloom predictions about commercial loans in particular, right? That I don't think that came to pass. What does credit quality look like these days?
Again, pretty solid.
Yeah.
I speak from the Florida perspective. I mean, we obviously pay attention to what's happening nationwide. Massive change in COVID that really did upset commercial real estate. But the market is correcting and finding ways to address it.
Yeah.
And even as you get to conversion of the housing supply challenge, looking at what is possible in terms of converting. So, there is opportunity there. And banks are taking, risk-based approaches to their portfolios and really looking at it. So we have not seen the catastrophic problem everybody was claiming might happen, though. different cities are dealing with it in different markets are dealing with it in different ways.
That was also the thinking about a year ago when we saw a couple of banks go down that just really made some bad decisions as banks at the end of the day. It wasn't a systemic problem as was thought.
Yes.
Appreciate it, Kathy. Thanks for coming on. Kathy Krainger, President and CEO of the Florida Bankers Association, former Director of the Consumer Financial Protection Bureau. Appreciate it, Kathy.
Absolutely. Thank you. Thank you.